In the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. Well, we've already had an exciting morning with markets ripping around, so thought we were going to have a lot to talk about with the market being a downside. The Dow Jones was in triple digits there for a while. As you can see, we actually have Mitch in person with us.
Morning, everybody.
Notice the contrast in attire. I have a polo shirt on here. Going to be 97 here in Scottsdale, and he has a sweatshirt, so he's in Minnesota. So always interesting to I keep trying to get him to move west, but it hasn't worked yet. Anyway, appreciate you again coming out and watching the show. It looks like we're starting to get some folks coming in right now. The result of this weekend's run for me was we're seeing some positive rotation, and it's interesting already watching the market trade this morning. We saw a weaker tone coming in, and market was selling down pretty hard. Mostly it was overnight risk that was coming into play, and we're, all of a sudden it's all gone. We get the ISM comes out a little better than expected, and everybody's buying. They rally the thing, and we actually go positive. We're up 157. So after all of the stuff, as I mentioned in the commentary last night, after we looked at the unemployment, we waited all week long for that. We went through all kinds of gyrations with other news and earnings and what have you, and it was a positive week. But by the time we got to Friday, there was nothing left in the marketplace, and we're continuing to see really a lackluster mode. The whole morning sell-off was an aberration at best. I think the Dow Jones down 110 and change, and now we're up 4.11 at the moment. So, Mitch, why don't you, if you would, talk a little bit about some of the rotation that came in the database this weekend that we saw. We were talking about earlier.
Yeah, I'd say the biggest movement that we saw this week when it came to the weekly run would be in that foreign exposure on the fund side. So if you go over to the dashboard side of Connect, you'll see when you click on funds that there was quite a bit of buying that took place this last week. And when you click on that chart, you'll see that within the international equity space, it was pretty much across the board in the foreign space that we took
Mitch,
on news.
I'll go over there and show them while you're talking
okay.
about it, because it's pretty abstract. No one has
Sure.
any clue what you're doing right now. So.
All right.
And I opened up the wrong browser, but that's okay. I've already got it all set right here on the dashboard. So what Mitch is talking about on the fund side here, I'll bring this up. Clicking on the funds, there was a fair amount of international movement right here. I've got it up there right now, Mitch. You probably see it on a delay screen, but we're seeing international equities is the biggest jump or change that we saw, and there was some other rotation when we look at some of the stocks. But sorry, we lost your visual here. I don't have a screen with you on this, but anyway, go ahead and why don't you review that, and I'll kind of click around.
Yeah, as I'd said before, and this goes with any of these charts on the dashboard, when you click on one of the top bars under the, for example, in this case, the group exposure, it'll drill down to the underlying subgroup. So in this case, if you click on that international equity space, you'll see that we're actually, we can filter this down onto the categories. And
I've done that, Mitch. So I've clicked on the international, and so now what we're seeing here is diversified emerging markets and some of the other elements. You should see them on your screen here now.
Yep. So, and as you see, it's pretty much across the board. There was buying. There was some selling in China, but pretty much we're going along the positions. So, any sort of new buying this week looks like it has been in that international space when it comes to the mutual fund sides.
Yeah, and the interesting thing is with the China selling, China came out with their manufacturing reports last night, and they're continuing to see somewhat of a contraction go on there. So it looks like it's pretty appropriate that we're seeing some selling in that region as well. But folks, there's a lot of information here in a way to kind of figure out what's going on, and even like I always point out, if you look at Mitch, I brought up the little bit of delay here, what he can see on the feed. But I brought up the globe at a glance, and you can see that for the most part, most of the Americas were bullish, and Canada, and then we've got Russia and some of the those elements, and Europe was for the most part positive as well.
Yeah, at this point, I'd say that all the pullback that we've seen over in the international space, especially in the BRIC countries and in the foreign world, that's given us that opportunity to create those new trends. And it's not really too surprising the fact that we've been out of these positions for the better part of a year to see all this new buying come in now that things have somewhat bottomed and starting to indicate some new buys on this space.
Yeah, no, we're back live visual here again, and one of the things I think is important to continue to understand is there is a massive rotation going on. I've talked about the death pattern, all kinds of things that are occurring in the database, and we're continuing to see a rotation. The BPM database actually picked up a little bit, just 1% or so on the weekend. I think maybe 1.2%. We're up to 47 and change. Let me look there. I think I've got some numbers here. But yeah, it's just picked up just a little bit. Volatility still is remaining pretty low from that standpoint. We're just really just grinding along here. There's nothing for market participants to grab on to here, and it's just, yeah, it is what it is. It's one of those things. Boy, we're going to have to come up with some pretty interesting features, maybe get some dancing girls or something. If the market goes into the dog days of summer, it could get really crazy quiet while we're doing a show. But the opportunity will be for us to start to feature some things. I've been looking at for this week's shows to feature and talk about some things other than the stock of the day, maybe looking at some alternative assets and other things just to see what's going there other than the typical golds, and that maybe start to go through some of the sector analysis as we go through this stuff.
Sounds great.
Yeah, so let's go ahead, and I'm going to go over to the markets now, and let's take a look. Come over to the screen, and I've got the daily S&P chart on the screen now for you, and I guess it's just more of a continuation. The interesting thing from my viewpoint anyway is that the markets are starting to show an interesting characteristic here, and this has been happening for a while. I'm drawing an arrow on these. There's a couple of these little spikes that continue to happen. That's a reversal spike. So depending on how we end up closing today, it's going to be interesting to see if this reversal today becomes significant for the market to give yet another try at this high end of level. The 1882 level I've talked about over and over until it's annoying is continuing to be the key pivot area. We got above it. Here we are back right now at 1881.37. We're trading right back up to that number. We need to close over it on a weekly basis. We closed just below it. We saw the activity this morning, and it's funny because it doesn't take much for a slightest little negative remark or report or even an earnings report to come out. The markets react immediately to it and then rebound right back. So there's just this tug of war going on, and it's finally, when you start to see these spikes, this is a technical situation that I've watched for many years. When you start to see these two spikes where the market gets down to key support levels and then reverses from that, you'll start to this starts to tell you that this market wants to come through the other side, the upside of the market. So there's still a bias to the upside. We'll go through some of the intermediate and longer term concepts that are important to understand here, but it's more of the same. You know, what can I say? Let's go ahead and take a look at, let's go to the weekly graph real quick and just take a look and see exactly what's going on. You may recall from the last show the PPM1 was printing about 0.26. Well, we've dropped all the way to 0.12. We're now below the minimum trend numbers. So the short term, so we're getting these mixed pictures. The daily, we're getting spikes. The underlying is starting on the weekly, as I've talked about, I don't know how many weeks now. I think we're working on the 12th week of this pattern. And I believe this has been a one of these ongoing patterns, but as we go sideways, we start to lose some momentum, and that's what we've seen here. So we're at 0.12. Interesting enough, the intermediate or middle PPM2 actually increased from around 0.2526 last week to 0.28, and the 40-week moving average, which I've talked about, is very similar to the 200-day, has actually gotten up to 0.24. It was, I think, 2.1 last week. So we're seeing the longer term averages starting to pick up, and because they are moving averages, if you go back 21 weeks, 40 weeks, the prices that are dropping off are lower prices, and with the market remaining somewhat stable here, you're going to have an effect of this starting to show some increase and support. I'm going to bring up so we can see this. Let's take a look at the actual values of this right now. 1861.53, we came just above that. The low today was 1866.77 on that spike. So we traded down to about the 10-week moving average. The middle average is 1842. Guess what? Remember the 1841 to 1882 trading range? Well, we've got pretty substantial support at 1842, and then the longer term average is way down right now at 1787.49, and that's not even in play at the moment based upon the action that we're seeing. So last but not least, we'll go ahead and we'll talk a little bit about the monthly, which continues to unfold here, in that we're seeing a 1.10 ppm, 2 is 1.38, and the ppm 3 is 101, and all three of those suggest that we're still within a pretty robust trend right now, and we're not going to break down at any moment in time. Let's kind of do a review as we'll go around the horn with some of the other markets, and I think we'll go ahead and maybe look at the Dow index, because this has actually been under pressure a little bit. As we bring that up, let me clean up just a couple of things here. I want to make sure it's easier to read. This is the weekly Dow index, and we're continuing to see it stay below the averages. The averages are basically flat. They're not really in any trend to the downside, so we're continuing to see this flat movement over here on the current action. We're trading down to 79.48. I think this is the tough part to look at with these markets right now. You have to consider that this flatness and this reaction to what we're seeing in the economics are coming into play in different areas in the market. For instance, if we go from the Dow, and let's go over to the 10-year Treasury, and you're going to see we dipped down a little bit this morning, but we actually went to the down to the 257 level on yield. So that as I've talked about, 255 to 245 I think is an extreme. Maybe we're finally getting to a point where this thing is going to turn. There really isn't any indications of that. I can take this chart all the way down to a very short-term view, and we're looking at the 1 hour view. So this is about a 1 month of the action that we're seeing here. And it's starting after this morning, it's reversed a little bit, just like the markets reversed on the upside. The interest rates reversed also. But there's a lot of mixed pictures when you're looking at short-term PPMs. You're looking at the market stabilizing, but it's still in the last 5 or 6 days has been in a pretty good downtrend. We went from the 272 level down to 257 this morning briefly. So, you know, who's got it right here? Is it the bonds or is it the stock market? And what do all these movements mean? And those are the things I'm continuing to try to find. What element is going to give the true picture of what's happening with the markets and what the ultimate direction of this crazy 12-week sideways trading range we've been in the stock market? Is it going to resolve itself to the upside or the downside? And is there any clues to what's going on? And I've talked about this before, where we're really looking at having I do like a reverse fundamental analysis. So I look at the technicals and say, what are they telling me? And then ask myself what might make that happen. And in this case, coming up blank. There's not any real fundamentals that are likely to change, and therefore maybe this pattern elongates even further before we start to see things. But you know, we still have the Ukraine out there. We still have some geopolitical risk, and there's not really a lot there. Market that we haven't talked a lot about, and I would like to bring up, is maybe look at before we move on. Look at crude oil, and let me get to increment of time here that we can bring up a graph. Let's look at the weekly crude. We haven't really talked about that. It's been fairly positive overall, not a lot here as we move back toward the close to $100 a barrel. But there's not, all of these markets, the commodity markets, everything's locked into a sideways range. So be careful in building, I guess, any kind of expectations for how your portfolios are going to run. Right now, there's some good, solid portfolios out there, but you know, like last week we were looking at, we've got healthcare and some other issues that have been under pressure in the biotechs, and you know, we're seeing where none of these markets are starting to make, I guess, to bring any perspective, and that's the thing I keep struggling for here, is to find a perspective. So sideways, we're looking at just a terrible situation from the standpoint of having any kind of leadership in any markets, any type of theme or scenario that's playing out there right now. It's just not available at all. So next market, let's go take a look real quick at gold. We're continuing to see it kind of flop around as well, and but this pattern, as I keep talking about, to me still looks like this market will end up moving up over 1,400 in the next, let's say, 3 to 6 months. I still see this as a positive scenario. I'm not sure right off. Let me go over to let's go over to VPM real quick. Let's take a look at and just see where we are in GLD on this. I believe we're long. I just want to see what model that we're running right now. Just really quickly. Yeah, we've got an open position here, and just to bring this up just a little bit so it's a little easier to see. In fact, I think I will do a couple of things here to make this just a touch bigger and easier to see on your screen. But yeah, so we're looking at from a 1.2 standpoint, this thing's been long. It's underwater a little bit here, but to me the patterns still look pretty positive. if we go over, I just want to see what a daily graph's looking like on GLD. We can see we're flat here on 1-2, and I suspect the same on daily 3-2 here. And so we're seeing the patterns setting up as far as the short term goes, and we should ultimately challenge these higher prices down the road. I'm not sure what's going to drive these right now, but the patterns are telling me that's what's going to happen as far as that goes. Let's talk real quick while I've got this up here. Let's go over to the home page. Take a look at the overall percent bullish that's here, and I'll make that too big. There we go. A little easier to see. We're continuing to see as the S&P goes up, we're continuing to see us stay down, in this 47% range, and I keep harping on this, but this is how the end of the party looks like. It's just a matter of how many more tops there are that might happen. So this is the general trend, and then you even have a sharper trend here that is showing up from the standpoint, and this is the same thing that happened earlier in the cycle as well. So back over here in way back in, I think this, I've got it blown up, but I believe this is 2000 and right before the 2011. So we had a similar situation where we had a steeper drop, and this is how these parties end. What's interesting, if you look at these two places here, we're looking at this trough that shows up. Sorry, I'm having, this device is not letting me see my cursor very good. There we go. Right here, where the market flattened out near the highs when we started to see the same type of activity, we're starting to see a very similar type action from the standpoint of what's going on with this pattern that we're in right now. It's flattened out, and we're seeing participation from the models continue to drop, and that's going to be a problem as we go on. So as we do these shows and doing a lot of live analysis, I want to continue to kind of bring you into the world where and how I look at things, so you get a more perspective and more in-depth ideas of what the commentary is going with. So we're not really seeing a lot here. We go over to the research right now. See, we're 47.89% long, 8,799 symbols. So there's it's about as neutral 50-50 as you can be. And just to kind of bring in some discussion here, is I think it's important to remember that this flows down through your portfolios. And my bet is if you bring up one of your stock portfolios, that you will see that about 50% of the stocks that you have long right now will also be, let me re-say that. If you look at the total amount of stocks in your portfolio, about 50% of them will be long. That doesn't mean you're 50% in cash, but it does kind of equate that. I believe the last time we looked last Tuesday, we redo everything on Tuesday, so I'll discuss this on Wednesday's show. But we're still about 56% long in most of these positions, and market's not going anywhere, so that's probably pretty appropriate. Going back to the market views here of what's going on, let's take a look, and let's see if there's some other areas that we can take a look into that we haven't really talked about much. Let's look at this is something that's getting sort of interesting, actually. This is a 30-year bond, and normally everybody focuses in on the 10, and you can see that looks like about 6-8 weeks ago there was an exit long right here on the screen, and meanwhile what that means, interest rates are not likely to continue to go up, and this is the 30-year, and we're starting to see this get down toward this 330 level again, and it's also picked up a little bit today after some drop in rates early this morning. But it's interesting because I don't have any of these charts built out. I'll have to go through this. I ran an institutional service for many years, and one of the things that the bank traders and a lot of proprietary traders look at is the differential between the 530, the 510s, the 1030s, and trying to get how the yield curve is acting. And we're seeing a flattening of the yield curve where the 30-year has come down more than the 10-year. And this is not telling us a lot other than that flattening if it goes, it would be a long ways from inverting, but once the flattening gets to a certain point, it does start to suggest that there is a demand issue out in the markets from an interest rate viewpoint. And those of us that have worked with yield curves for quite a long time often will talk about flattening or inverted curves and all that type of stuff. We're not going to, with the current Fed policy, there's not a chance that we're going to see any inverted yield curves at this stage. So one of the places we have not been yet this morning, which we're going there now, is looking at some of the short-term activity in the markets. And I think this is, I'm going to bring up a 5-minute graph so you can see this rally that we saw. It was interesting to see as we were making the low, we saw the volume pick up from the average volume. The rate of change of the volume picked up right at the lows, and I talk a lot about this. A lot of folks seem to, I think it's inverse to how things really work, is when volume picks up, it's usually a climactic type situation where even a high or a low is being formed. This was the case this morning, and now volume has flattened out a lot relative to what it was doing right at the lows. So when you start to see high volume at a high, or that doesn't mean the market's going to continue in that direction. That seems to be what people like to reference, or you hear a lot from the talking heads on CNBC that, it was high volume, so that means this is good. It confirms the action. It's, in my experience in some 30 some odd years, it's been the opposite. It's typically volume, high volume, or a climactic volume situation is just that. It's a climactic price situation, and prices tend to reverse after that. And the best rallies and the best sell-offs are done on low volume. And I promised, and we'll probably do this in Process Warriors. We've got a lot to do this week. We will be doing a show tomorrow at 3 o'clock Eastern time, and we'll be starting to talk about constructing and more off of the philosophy that we talked about last week. But this has a lot. At some stage, what I promised is that we would go through price discovery, how the prices move and what makes them work, and we'll probably do that maybe the next week or so. We'll start to get in to the point where we've talked about the process enough that we're able to move forward. But pretty quiet since prices stabilized up here. All of a sudden, it's like this morning didn't happen. So that's what we're going. Mitch, I've got you hanging around. Do you have any thoughts on some of the things I've talked about that you could add? Yeah,
actually, I was just the line that keeps running in my head as you've covered a lot of these things is what you've said numerous times, both in Market Thunder as well as podcasts and in the commentary, which is all news right now has been good news, or all bad news is really good news. So where are we at, do you think, within that span where it shifts back to bad news being bad news? I mean, we're seeing the Fed scale back some other activity, but even some of the reports that are coming out right now are conflicting at best. And wouldn't you agree that sort of has to do with the fact that they think that the Fed or is going to keep the markets supported at this time?
Yeah, I mean, there's still QE going on, and that's the hard part, trying to figure out what all this really means. I don't really see that that there's anything significant here, and the economic reports have been mixed for the last 3 years. There's some gradual growth. The jobs report was interesting. We got 288,000 new jobs, but if you look at the type of jobs that we got against, there was a bunch of temp jobs, and then the big deal, I think, on the employment number to really contrast what you're talking about is that when we had the you know, we had a participation drop of 800,000 people. I saw some character on CNBC talking about it sometime. I think it might have been a video or something that I saw. But they were talking about, well, that was all the people that when the unemployment you know, payments stopped, all of the comp stopped, that now everybody's just retiring now because they can't collect a check anymore, which, I don't know, 800,000 people doing that seems like a lot. I know there's a lot of folks in this country, but I don't think that explains out exactly what is going on with the marketplace.
I remember reading a little bit about that figure. I'll have to dig into the numbers again, but I think some of the information that was a little troubling about that 800,000 was that it wasn't all on the backside about people retiring. It was also a lot of people from the younger generations that just haven't been able to get jobs, and so they're sort of just disappearing out of the workforce.
Heading back to mom and dad's house, I guess.
Yeah, you got it, yeah.
So, yeah, I mean, is the economy better? Absolutely. Is it 288,000 new jobs better? No. We're probably still pushing the 200 mark, which is decent, but the unemployment number going to 6.3% had nothing to do with the 288. It had everything to do with the 800. And, you know, we've got the lowest participation rate now since 1978. And the population since 1978 is probably 40, maybe not quite 50%, but we probably close to 30 to 40. I think we're probably, if I can remember back in my younger days, we were probably 200 million people in this country. Now we're over 300 million. Right. So percentage-wise, it's a really big number. It's a lot bigger by, you know, and they're talking percentage, so percentage points to percentage points, but there's a lot going on there. And I mean, that's the underlying problem. And the theme, those of you who've been around for a while, you remember the theme that I talked about many years ago was the actual theme of corporations learning how to make more with less. And we continue to see that there's not a big effort to hire. There's more effort to even, you're starting to see some M&A activity pick up in this year, a little more than last year. But there's a lot of people looking to buy efficiency if they can without adding on lots of new jobs. And it continues to be the case on how to make more with less. The economy, you know, everybody wants to push their numbers up to 3% and 4%. Maybe that's what ends up causing the issue that ultimately the market starts to decline because everybody gets too optimistic and maybe they start to bump up their expectations for earnings and et cetera. And now all of a sudden we've got lots of disappointments in the last 2 quarters of this year. There's always a risk of that. And I think that's one of the things that people forget, that most of, after going through this current earnings expectations have been lowered a lot because of all the snow and the bad weather back east. And those things actually are the things that everybody's pointing to. So now everything's going to get better now, and we'll have to see how it flows. But I guess the biggest bore of there is out there right now is there really isn't anything to look at that actually go, hey, this is exciting. I can see the trends. The trends are positive, but not very. Sure. It's sort of like looking at the markets. You know, we've got underlying longer-term trends, but we're stuck in this range right now, so it doesn't mean a lot.
Yeah.
So let's go ahead and let's do the stock of the day. We've got several today. Let me get through my look here. We're going to start off, I think, with Target. We're not long this stock right now. Let me just get over to the right screen here real quick. Still not there. I will get there eventually. There we go. So that's going to be TGT. And here Mitch and I are changing our scenery a little bit, and we're now behind the big orange chart. But one of the things that before going into these stocks, seriously, if you folks out there listening have anything you want us to cover, let us know. It actually make the show much more interactive. We have plans. Probably this week we'll stick with Process Warriors, but doing the Mitch and Bob show and talking about what's going on. But down the road, we're going to start bringing you folks in to these shows, and we have plans on doing a call-in show, because you might have a question right now. It'd be nice to have you on and ask a question that I could respond, and we can actually talk about what's going on with those situations right now. So going over to the charts now, is we can start to look at some of these things, and I've somehow managed to get not on TGT. So let's try this again. Put that up there. I guess I put it on there, but I didn't hit enter, so that's going to change it just a little bit there. So here we are, TGT. We've got it up on a weekly basis. You can see we've been out of this stock for a while, and this is TGT is on 3.2. Let me just see what I have this on right now. Yes, this is 3.2 that we're on. So we've been out of this stock for a while. It's been declining, and this is we're starting to see a collapse in the momentum. From a ppm1 is now at minus 0.41, ppm2 minus 18, and ppm3. So all three moving averages are actually declining by a reasonable percent, and in fact they're in pretty robust downtrend. So while this stock stabilized and spiked down to an extreme, it's still setting up a pattern. Looks like we're going to have to retest this level before we get to the ultimate bottom.
Hey Bob, so in the case of Target, obviously they made the news late last year with the whole data breach right around the Christmas time, holidays, and the shopping and all that. And you know, they just announced today that the CEO is getting pushed out of the company. So I mean, fortunately with VPM, we've been out of this stock for some time, especially as the decline's been unfolding. Do you have any sort of comment when you see this type of activity where a CEO or some other key player in the company gets pushed out, what that could mean for the stock and whether it should be on your portfolio going forward?
Yeah, I think that I guess when we come to stocks, this is really what's key, is understanding the stocks you're dealing with. The good news is, as you said, VPM's out of it, but when you're starting to look at stocks and you're doing screening, one of the things that I plan on talking about probably this week on Process Warriors is how to keep your individual bias out. Now, so to go there, that's an opinion. You know, sure. Is the CEO important? And very much could be. It's not unlike looking at a mutual fund and see a manager change, right? Is that big? You know, it can be. It can be a big shift. If you can think, probably the most visible over the years is like the Magellan Fund when Peter Lynch left, and then I forget the guy's name that took over that, but about 4 or 5 years later, he overbet in bonds and made a big boo-boo and got out of compliance with the prospectus, all kinds of stuff, and he left. And did that affect the funds? Absolutely. And it's the same thing with the company. A CEO is very important, and you know, so that can be a consideration for you. But I think when we start talking about keeping the bias out, sometimes a new CEO can be a good thing. So and maybe there's some new blood in here. But for right now, moving averages are down, everything's down. So I'm going to go with the technicals and be glad that we're out of this stock. But if it's on a screen and it starts to come into some kind of value screen, a lot of times when the stocks start to decline like this, all of a sudden the ratios come into play and you start to get on a value screen. I remember in 2008 that Goldman Sachs was on a value screen, and you know, around the time that Lehman was failing, was about to fail, and you know, the banks were pretty out of favor, but when you did the screen, they were there. But VPM, even then, VPM didn't get a buy signal on it because of the technicals and what we're looking here. So you could actually find this stuff on one of your screens and really start to bring in, you know, some stocks, but they may not get triggered from a technical standpoint. And that's I think the beauty of using a fundamental screen and bringing in VPM as an overlay. As far as the CEOs go, yeah, there's a couple things. When we start digging into process, when we get into the section talking about screening, then that's when we're really going to start to discuss what the elements of screens and what type of filtering that you can do. And once again, I've been talking to a lot of advisors lately when I get on the phone with them, is talking about being careful about any sort of bias. I call it human bias, that you're not sticking purely to the screen.
Yep. Yeah, that certainly has been an issue lately, where advisors have been putting their own opinions into things instead of just letting the screen rotate the names in or out as the screen refreshes.
Yeah, and there's some issues. I'm anxious to dig into that stuff this week. So once again, even if you don't have the chance and you're watching this video stream right now, or you're watching us live, you get the opportunity to see that both in our Ustream account as well as our YouTube account, and you can go and click on the Ustream banner on the front page and get to that stuff and go from there. So going back to the charts again here, let's go to our next stock, and let's look at, speaking of the banks, let's go to JPM. And let's see, I believe this is also 3.2, so I have the right model on there. We're out of this stock, but you're seeing similar type event that we saw on, and looking at Target. We're out of this stock, it spiked up, and now the market is starting to decline. All the PPMs are negative. I'm going to point out something here. I think this is actually pretty important for me to highlight at the moment. One of the things, I can't remember, I'm pretty sure the article I wrote on buy low, sell high a couple years ago now, it was talking about what VPM was programmed to look at. And I think this, I want to tie this in here as we're looking at this trade signal, because this just brings up a classic for me as far as understanding risk and where you position yourself on the scale within a trend. And some of you maybe have been frustrated. The market starts to go up. We got out of a trade, it goes up, and VPM just doesn't get back in it, and then ultimately hits a top and it declines. This is a pretty good example of that. I believe there is that you can find a document out there. It's called From Philosophy to Reality, and it was a white paper that I wrote way back in 1998 when I first started the company. And one of the things it discusses is the different points where VPM is going to buy. And one of the things that I programmed it to do, which I think is important to understand, I programmed it to actually not do certain trades or not participate in trades at certain points. And in that article that I wrote, I talked about, the types of patterns that VPM looked at. And one of the things that VPM aims to do all the time is to find that middle part of the rally, or what's from an Elliott wave viewpoint, from somewhere around after the bottom of wave 2 to the top of wave 3. And so wave 4 is a corrective wave, wave 5 is the final wave, and that, in my opinion, was targeted as to be the riskiest place to get involved with the stock. And occasionally we'll see the market will, a stock will break out, and we'll see what we call a level 3 buy, and those will fail. Most of the time they don't even get in. Sometimes they'll get triggered just by a slight, but they usually are quick to get out right away, so there's not as much risk as you might think where it's hanging on too long. But this chart here, I want to show you here, because I think this is actually highlighting this is highlighting exactly what I see happening here. And this is classic VPM, folks, and I think it's important. So we have this nice long trend that I just drew an arrow where we bought really nicely off of that low. It looks like a wave 2 bottom. There was a move up. This is wave 1. This is wave 2, and then this long arrow I bought is 3, and then the ultimate pattern that we see here happening is that we bought it and we sold it one last time here, made a small profit, and then we're out of it. And what happened was when that failed, the next time that the market made this new high over here, just draw it up right up over here, once it made that new high, VPM didn't care about that anymore. The momentum had broken, the patterns had broken, the moving averages were contracting, some of the things I've talked to you about. And at that point it says, hey, I'd rather be out of that. Even though we sold that stock lower and we've just now gotten back to that level, it's the understanding how much risk is at different points in the trend. And that's going to happen. You're going to see those type of things. In fact, one of the trades I was talking about here, where we got a buy over here, then a very quick exit. This is one of those where it looked like it was going to break out, and it didn't over here in the middle, and it just absolutely, it failed, but it was quick to get out of that trade. And it's just going to try to stay out of those trades. It will occasionally give a signal in a pattern like this, but they're hair triggers, if you will, to get out. And one of the things on Process Warriors, I know we're excited and we're working on a side project so that we can get this out to you, but we're going to be talking to you a lot about the trade impact chart. So when you have a signal like this, what was the net effect to the actual portfolio that you're running this in is more important that the stock bought and sold or lost a little bit. It's really what is the impact of these situations when they're happening, and that's a lot what we'll talk about on Process Warriors as we come through this week. We'll be talking about that particular chart and going through there. So JPM, not a lot there. Last chart we're going to go through is Caterpillar, CAT, and this chart is much different. We actually have a long position here, and you'll see that the trend that's unfolding here is pretty robust. We're going to go back to the PPMs. I'm going to highlight these, and this is stuff I've been trying to emphasize on the show, kind of as an educational element, but for you to further understand where we're at. And the unfortunate part, we don't show the values right now on the PPMs on VPM 2.0, but you can see off on the scale, if you look at it, you can get a sense for where it is, and anything over 0.25 is pretty positive. In this case, we got 0.73, 0.91, and 0.55. And actually, some of this information, if you guys had every bit of information, it would probably just build more anxiety in your ability not to follow the system, because you start reading into something downticked and get all nervous, and we don't want that to happen. That's really about, VPM has the rule base there to be able to do this, and that's really what it's about. So the moving averages on this particular chart are really good shape. It's interesting, these guys have done a lot of business in China, and that's the international scene is what everybody talks about when you're talking about Caterpillar, but you know, this stock's doing pretty well in spite of some of the softness in China and even India from that standpoint. And maybe one day we'll actually really rebuild our infrastructure here, which needs to be done, to say the least. But let's take a look just for fun, see what this chart is doing on a longer term basis, and take a look at the monthly graph. And you can see here let's call it after the Great Recession and the collapse. See, this stock literally went from $20 all the way up to 104. And we look back at some of the trades, there's been some spectacular trades during that sequence. It was a couple trades on the upside. If we go back here real quick to the weekly, this was one of them. This 09 to 2011 was the big trade that we participated in. And since then, guess what? Not a lot's been there. We have been out of this stock. I guess this is interesting stuff to me. Is it's about being in stocks that are going to trend. So we stayed out of this stock from 11 all the way into 13. We had 2 buys, And what did I say the other day? Third time's a charm. We used to always say on the trading floor, sometimes you have to do the same trade literally 3 times to get it right. And while neither one of these trades lost or didn't bring up the P&L on them, but neither one of these trades lost or maybe made a little bit. And it was the third trade that actually showed where the trend was ready to go. And here's the thing, in hindsight, you don't know when you see these triggers and you get an exit and then the market goes up. Maybe a client or somebody, an amateur looking at this would go, gee, we got out, then the stock went up anyway. Well, that's really nice because that's called hindsight. And what you don't know is when one of these triggers happen, that it's not a big decline. If you had the same, this is a good example over here where this exit happened. Look what happened. The market rallied back. Oh, gee, we got out. Now the market's going up again right before it collapses from 104, down to 60. So it's about understanding really what the systems are trying to do. For the most part in individual stocks, it's about rotating and staying within the context of your screens and rotating stocks. It's not about capturing, I'm going to be an expert in in any stock, Caterpillar, or any stock that we have in our database, which are over probably 10,500 just individual stocks. The rest are mutual funds and ETFs and what have you. But this is a classic case of a huge trend that unfolded on intermediate level. Here is one of those didn't get in modes where the stock went up a lot. And if VPM, you have to understand that these models were programmed by a human, which happened to be me, and it was told what to look for in these trends and the characteristics. So some of this stuff was there was a good trade there, hindsight being 2020. Maybe there were 2 good trades, but VPM wasn't programmed to recognize this particular pattern. And more likely, when you look at these PPMs down here without going to a full analysis, there was never a trend element that popped out of there. It was more noisy than it was anything else. So rather than take a chance or a guess like maybe you or I would, it's looking at more quantitative viewpoint. And so meanwhile, it stays out of the stock for a couple years, and now finally we have the first pattern that goes into context of what I've been talking to you about, what these trends look like, with the PPMs expanding, all 3 of them expanding. They've moved apart here. I'll make where they start to spread out, make a couple arrows here, where the moving average differentials, they start to spread out, and this is where what a trend looks like. It's the same way it was in segments of 2009 to 11, but this is the first time that we've really seen this. There was some of it in 2012 when it spiked back up to looks like around 110 or so before it declined back to 80. But this has been the best pattern set up in combination from all of the elements that need to line up. So all the stars have to line up for VPM to be able to get into that. So the nice thing about doing a good quality screening, which Process Warriors will bring in, is really trying to get a good rotation of these stocks and keeping you or I out of the way from an emotional standpoint, what kind of decisions and filtering they're making. And I think it'll be interesting. We talk about the human bias, that how easy it is to get a human bias into a screen. It's amazing. So we'll talk about that at an appropriate time. So we're coming into last several minutes of the day here. Just what we'll usually do at this stage, we'll go back, we'll take a look. Market's just completely dead. One of the charts we didn't look at earlier, which was the intraday futures. Actually, these are 24-hour charts, and you'll notice a couple things happen. The 5-minute graph this morning, this cycle low was like spot on to when the market turned around today, and we're probably another, I'm not sure how many bars we have to get over here yet, but we have probably another 20 bars or so, another half hour to an hour before we get a next cycle. But also, it was interesting this morning when I was watching this thing. I remember sitting here, I'm going, oh, they're going to run this thing all the way back to unchanged or maybe positive on the day. And here we were this morning, you can see on this cycle, the hourly chart happened right on the cycle. And I've talked about this cycle that keeps happening. This is, like I said, a 24-hour chart, and you see these little spikes in the volume reversals, and they tend to be at turning points. Just to bring this up real quick, that's this area here. All of these, I'm just going to kind of draw these zones, and they continue to. There's tends to be a motion. It's about a 23-hour cycle to be exact here, and so we continue to see that. This morning, interesting enough, that cycle came in right, the first hour of trading today. We saw a reversal. We saw the ISM come out. They had a little stimulus, and it was the typical stampede in and stampede out. So they were stampeding out, then the herd quickly turned, and off they go. So yeah, so these patterns continue to unfold. Now, because we had this one hit, guess what? We're going to come in maybe just before the opening tomorrow, maybe just after the opening. There'll be another cycle. If we trade up into that range, it's going to be a high cycle. Probably will be where that comes into play. The really short-term stuff here, I'm going to go back and just put this on a 1-minute graph again. We're seeing some minor selling coming in. We've just dropped through what's called the value point over on the left-hand side here. You can see a thing that says V 1875.25. We're trading right at that value right now. That's a pivot point intraday from the activity point, from the amount of trades that went on at these different levels. You can determine where the midpoint value point is, and that's under pressure right now. But there's really not much to go with at this time. So once again, I'm going to promo our activity for tomorrow. Don't miss the Process Warriors, and we want to make sure that you are really paying attention to those meetings. That's going to be about running the software, about really utilizing the product, and I now have this unlimited way to talk to you about a lot of issues that we want to talk about. The Market Thunder shows continue to be just about what they are. So I'm going to bring Mitch back into the mix here. And so maybe he has some comments on some of the things we discussed today. I hope, anyway.
Yeah. Yo. One of the things that I just remembered, I know it's sort of fun when you're working with clients, when you're describing what a company does, to show some sort of video or some sort of news item. And as you were talking about Caterpillar, one of the things that made me think of is Caterpillar recently put out a video. I don't know if you've ever played the game Jenga. Have you ever played that, Bob?
I have.
Okay, so what they did is they made a scale model of Jenga, and they were actually playing the game with their Caterpillar equipment. It's really amazing when you see these machines picking up these giant wooden blocks and building off of it. So it has absolutely no value whatsoever as far as the actual company, other than it's just amazing to see what these things can do.
Maybe we can find that on YouTube, right?
Yeah, just do a quick Google search for Caterpillar Jenga. It'll pop right up.
Interesting.
So if you happen to have any clients or you yourself own some Caterpillar, just take a look at it. It's just a fun little thing to see.
Yeah.
Again, it probably does absolutely nothing for you other than waste a few minutes of your time and get a little chuckle, but it's just really neat to see. It's so we'll continue giving you stuff like that anytime that we see some
of course, yeah. Process Warriors, we've got a bunch of tools I want to show you that I have on my desk that I think are really, really cool. So we'll bring up all kinds of stuff. So, folks, once again, thanks for spending the time. Those of you who've been on live, those of you that are watching streaming, we appreciate you taking the time out to do this, and hopefully we'll continue to get some really good perspectives. So, for now, we'll say goodbye, and we'll bring you up and promo our new video that we have for Process Warriors. Have a great day, everyone. Oh. Looks like I crashed. There we go. All right, folks, have a great day.